Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, July 22nd. And we're looking at Window Trader's market profile of SPY, IWM, and Triple Qs. If you hear that rumbling in the background, again, we're having another thunderstorm. Never seen so much rain here in South Carolina than I have this past month. I love thunderstorms, but they've been nonstop. A lot to talk about. We will recap all three of these indices charts. Good week for the S&P, even with today's action. We close up about $10 on the week. The weekly is up. The daily is up. We have we tied for the most one-time framing up 6 days in a row for the year. We'll have a chance on Monday to actually extend that. Today was more of a consolidation after the market failed early today above yesterday's high. We do go out with double distribution days for all three of us. Russell was really trying to close theirs late in the day, but the bell saved the bears. Again, unless we take out a daily low, again, it's not even consolidating yet. And I don't mind if we do that. I really don't prior to the Fed speaking. Right? We'll go over all that on the charts. Russell and Qs actually had a chance for an outside day down. So they're back into balance on the daily. They took out yesterday's high and yesterday's low, but they closed inside yesterday's range. So no outside days down. But they're back to balance on the daily. The weekly, we pulled back and tested that weekly balance high a bunch of times, but again, closed above it. Russell got close to it. In fact, they got below it in J, but closed above it. Qs never came anywhere near it. They were still $3.50 above it. So I had a good day trading, a lot of small trades. Now, look, right off the bat, I'm going to tell you, I did not expect the market to pull back as much as it did. That's number one. However, I didn't get hurt by it. And again, it goes to the premise of we have to respect what short-term traders can do, right? We had a little nuance in C, a little, not nuance, we had a head fake in C when we took out B's high to stop the one-time framing and eat away at our excess. We also all had excess in A period. And this is a possible excess on the weekly now, okay? So we are going to see, right? Excess ends one auction and begins another one. Well, we certainly started another auction. We went from 400 to 392.75. So we had a $7 auction, basically straight down after C. We didn't stop the one-time framing until L. Same with the other ones. So we're going to see if that excess holds or it's just short-term excess. D period not getting the opening. That was, this is what's, again, about my room for $30 a month. We had very visual things at the opening. We had the opening. We had yesterday's high. We had the overnight high. We went back and forth through it, A, B, C. I said, whoever wins that will win the day. Well, guess what? The sellers won it. Look at D. Never got there. Boom. Did I expect D for us to go from D's high to where we traded as low as? No. No, didn't expect that much, but they won the day. This isn't said in G or H period. Well, they never got above the opening and the overnight high, so that's why the sellers won. No, we said it as it's happening. As it's happening. Had a good day, a lot of different trades. To go over them is even crazy. I did a lot of small trades throughout the day. I traded from the long side in A against the base of the price probe. That worked out. I traded long in B because I didn't think we would hold singles initially, and we didn't, and that worked out. Then I shorted B against the opening. I actually took a short also in D, saying I don't think there'll be single prints, which there weren't, but then we got... I took a long in D, saying there'll be no single prints, but which there weren't initially, and then we did have them. I took it off. Once E started, I'm like, nope, that game's over, and took it off for a small loss. Then I shorted E twice, scalp shorts 397, shorted H 398s. I did take a long in I. Why? Against the previous balance low. Worked like a charm, went right up. I didn't take the whole advantage of it, but did well. Actually lost on a small short in J, and then I made in J on a couple of longs, thinking we were going to pop the top. It never happened when I had my long. I stuck with them through J. I did it in K, made pennies on them, and then finally L did it. So I just did a lot of little trades throughout the day. My best trades were probably the shorts in E and G with the one-time against the one-time framing, scalping a bunch of those. So it was a good week. I saw the week very well. The one bad trade I had was on Monday, and again, I don't think I saw the market wrong. I did certainly at that time, but we were right because the market did the rest of the week what we thought it would do. But that doesn't matter in your P&L, does it? As far as destinations, upside, we have two sets of single prints. First one started 396.64. That's F's high and get filled at D's low 69. Second set started 396.91. That's E's high, get filled at B's low, 397.21. So they're both small sets. Then today's high is a weekly high and a monthly high right now with 5 days to go. 400.18. Singles get, the gap gets filled in SPY at 401.44. ES filled their gap to the tick, but because of our dividend, we still leave 126 points or pennies to that. It was also incredible. That should have been a telltale sign when they filled the gap in ES. It got rejected big time. This C high threw me a curveball because once we took out B's high, I thought maybe we take back the excess and go back and get SPY's gap. But that was not to be. For the downside, we have today's low of 392.75 daily low, 391.63 daily low, 391.03 daily low, and single prints 391.02 to 390.52 from July 19th. Now, let's go to the charts. Let's start with the little engine that tries, the Russell. We have 5 days to go to the month. The monthly is down, but it is an inside month. Now, if we have an inside month, and I've spoken about this many times, a lot of people will go right to balance on it. I would probably call it down to balance. I would need them to take out this month's high at some point to go to firmly balance. Okay? Because it does not stop the one-time framing. What they have done so far, though, is stay above 173.39, which is that key level for us, and they're above their weekly balance high. So for now, with 5 days to go, I'm still saying it's down the monthly. The weekly is up. Came out of a 4-week balance, and it's up. And that's after 2 inside weeks in a row. The daily is balance. It's a 3-day balance. Why is it balanced? Because we took out yesterday's low now. So now we encompass these 3 days. Now, did it take out Wednesday's low, 178.40? No, it didn't. So, wait a second. 178.40. Why are they showing... Oh, yes, it did. I'm sorry. I'm losing my mind. So it's a 3-day balance, but the whole range is today. So markets don't go bull bear. So we went bull, and now we're balanced. So now we're going to come out of this 3-day balance back to bull. We're going to come out of the 3-day balance bear. I think the Fed's going to have a lot to say about that. So the monthly is down, weekly is up, daily is balanced on the IWM. Triple Qs, same thing. Monthly is down, but it's an inside month. We'll determine next Friday what we will call it, if it's an inside month. If we take out last month's high, obviously it goes to balance. So for now, the monthly is down. Last month's low got to 269.28. Our big target was 260, 265. So is that all they wanted to do? We'll find out. Weekly, up. Came out of a 4-week balance, out of a double inside week, to the upside. Now, they did pull back a lot, but we got to give them some credit, right? We pulled back $6 actually from today's high. But again, that's kind of healthy, right? We don't want to go just straight ripping up. Their next target is now this week's high, and then those 2 highs, which one of them is the monthly. So up on the weekly. And the daily, balance. Now, do you want to call this just a 2-day balance because it didn't get much into Wednesday's range? That's fine. You want to call it a 2-day balance? That's fine. It doesn't matter, right? It's an art, not a science. So, it's not wrong to look at it either way. But for sure, they're in balance. And by the way, look at the 50 and the 20 looking to converge. And I think it's the same. Let's see, Russell. Yep. And guess what? It's going to be the same on us. We have something happening here. So now let's look at SPY and ES. Monthly's down, but it's an inside month. Weekly, up. Came out of 4-week balance, up. And then the daily, up. We did not stop the one-time framing. So we're the only one that still has the daily up. And it's one-time framing up 6 days. Do we beat this 6 days in March? Now, in that March time frame, they stopped it 1 day to come into a 2-day balance or 3-day balance, whatever you want to call it. The next day took out that day's high, so now you're firmly in a 3-day balance, and then they resume one-time framing up for 4 days. Now, let's talk about what's coming up next week, because look at the 50 and 20 converging on all three of these indices. That's number one. Number two, something has changed here. This is the second time all year we went one-time framing up 6 days. Is it going to get derailed, or is we going to get more fuel to this upside? We have major tech earnings next week, right? You're going to have Amazon, Apple, Microsoft, Google, what else? Whatever. Facebook, you name it. They're all coming out. But more important than that for me is the Fed. Now, we're all expecting that 75 basis point hike, right? I don't think they're going to disappoint. I think that's what we'll get. The big thing will be, obviously, they're going forward statements. Will it be 75 again? Now, again, they don't meet till September after next week. So will they, and so that means you're going to hear them for 8 weeks talking. Will they say, we'll see what goes on for September for a full point or 75 or 50? Who knows? But if the market likes what it hears, I think we can continue to push up. I wouldn't mind seeing the market come into balance on the daily prior to the Fed. So either Monday or Tuesday, take out a previous day's low, come into a 3 or 4 day balance. Why? Because then, right, we would have gone bull, balance. Now we see what the market hears. If it likes what it hears, we come out of balance bull. If it doesn't, it comes out of balance bear. If we continually just keep going up like this, even if it likes what it hears, that's just horrible structure. At some point, it's going to get taken back. So for the longer term health for bulls, I want to come into balance first prior to the Fed in case if what they hear they like, we can continue this upward move and finally take out a monthly high. Remember, today's high is a monthly high. So if we don't, whatever next week's highs are, if we don't get above 417.44, that's going to be your monthly high. And then we'll be interested if we can finally come out of an inside month to the upside. A lot happening. A lot's going to be on the table. Again, I hope you had a good week trading and these videos really help you. I think my trading room would help you tremendously if you're a day trader to see how the market acts and why. I appreciate the likes and subscribing to this channel. Go on Amazon and check out the book I wrote, which is a kid's book, and it relates to the market too, with a glossary in the back. It's called ALGO, the Alligator. Enjoy your weekend, stay safe, and we should have a good week next week. We'll speak prior to the opening on Monday.